the best stocks to buy right now, which are down the most year to date. I asked you guys what my next videos should be about, and here we are. With the S&P 500 being down roughly 10% year to date and the ups and downs we had so far, I think there are a lot of opportunities in stock picking. In this video I will show you my favorite stocks that I'm buying right now. I'm very excited to see what you guys think about these stocks, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the stock market. So, the first stock on this list is SBUX, ticker symbol SBUX. They presented quarterly results a few days back and the stock price went up. On the lowest point, the stock was down roughly 36% and right now the stock is down 30%. I do own shares of SBUX, and in my opinion this is one of the more exciting stocks in my portfolio, especially after the recent earnings and of course the comeback of the founder Howard Schultz. So first of all, the earnings. I think people expected better earnings or outlook because the lockdowns in China. But SBUX reported an EPS of 59 cents, which only misses by 1 cent. Revenue was in line at 7.6 billion, being up 50% year over year. One of the most important things right now are the comparable store sales, which are up 7% globally, 12% in the US and double digits international, excluding China. Another great thing are the active SBUX memberships, up 70% in the US to 26.7 million members. SBUX also opened 330 new stores and ended the second quarter with 6,130 stores globally, 51% of them being company operated and 49% being license operated. Another interesting thing is that Schultz announced 1 billion in investments for the fiscal 2022 on wage hikes, improved training and store innovation during fiscal 2022. A lot of people were expecting bad news, but it seems that the results were okay and people start buying SBUX stocks again. Since the earnings, the stock is up almost 8%, and I'm planning to buy SBUX stock this month because of the valuation is quite interesting right now, I think. SBUX has a PE ratio around 20 and a forward PE ratio of 22. So at these prices I think they are a buy based on the PE ratio. And that's not the only good thing about SBUX. But they also pay this juicy dividend of 2.4% dividend yield at a payout ratio of 55%, meaning they have 45% left in cash to pay down debt, buy back shares, do acquisitions and all other things. The 5-year growth rate is sitting at almost 16% and they grew the dividends for 11 years in a row. Very nice. One of the things I used to like about SBUX are the share buybacks. They bought back 20% in the past 5 years, which is quite a lot and did add a lot of value to you as an investor. But since the comeback of Schultz, there's a hold on the share buyback program. So this is something I don't like about this stock. For now I will keep adding SBUX stock to my portfolio because of the current valuation, dividends and outlook. When I'm going to buy this stock within 2 weeks, it will become my second largest position. The next stock on this list is Visa, one of my favorite stocks and a top 3 position in my portfolio. This stock is only down 5% year to date, but it has come down a whole lot more, and that was the exact moment I bought some shares of Visa. And I think when this stock will come down again, I will add a big amount of shares to my portfolio again. So, at these prices you can argue about the valuation of Visa. The PE ratio is sitting at 31, so you are paying a premium for this one. But it might be justified to pay a premium. The only thing you want to check is how high this premium should be. Personally, I would go for a PE ratio of 30 or lower, so it's almost there. Visa has a really high profit margin sitting at 51% and both return on assets and return on equity are quite high in my opinion, which is a good thing. They have a quarterly revenue year over year growth of 25%, which is insane for a company this big. Next to that, more and more people are buying stuff online and using Visa as a payment method, meaning Visa will only generate more and more money in the future. Next to that, Visa bought back roughly 20% shares back in the past 5 years, which is really high and did add a lot of value to you as an investor. The last thing I like about Visa is the dividend growth. The dividend yield itself only sits at 0.7%, which is not the highest to be honest, But the payout ratio is really low and the 5-year growth rate sits almost at 80%, which is really nice. My final conclusion on this stock is to buy whenever it's around $200. For me, this stock is a no-brainer, but you have to keep an eye on the valuation. Buying Visa at $200 means you pay a premium for this one, and not every investor is okay with that. The last stock on my list is Home Depot. This stock is down 25% year to date, and I think Home Depot is a buy at current valuation. PE ratio is below 20, which is very nice, so you don't pay a premium as you did with Visa stock, for example. This stock did benefit a lot from the lockdown periods because people started investing more and more in their own home. But it's expected that the do-it-yourself sales in the US will grow even more in the coming years, meaning Home Depot can grow the business. I think Home Depot is a defensive stock with a decent amount of growth, but won't give you double-digit growth every year. But it's nice to have a steady stock in your portfolio as well to balancing things out. One of the things I like about Home Depot is the share buyback program. They bought back roughly 40% of the shares in the past 5 years. Another great thing about Home Depot are the dividends. Dividend yield is sitting at 2.4%, payout ratio at 44%, meaning they have 56% left in cash to pay down debt, buy back shares and a lot of things. The 5-year dividend growth rate is sitting at 18%, which is also quite nice. A thing to keep an eye on is their debt, sitting at 46 billion. You want this number to go down in the coming quarters. My final conclusion on Home Depot is that you got a nice and steady stock which is growing and the forecast is also quite nice. I'm probably buying this stock in the coming weeks, but first we got the quarterly earnings on the 17th of May. After the earnings I will make a decision whether to buy the stock or not. It's also based on the outlook. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.